Introduction to Forex trading. Mostly, I understand that people have some misconceptions about Forex trading and all. It's a scam, it's gambling. Yeah, a lot of things. But one thing I want you to understand about Forex trading is that it is never gambling. Yes, although there's an aspect to it that looks like gambling. But if you know, yes, I have to be honest with you, because if you know the ins and outs of Forex trading, you understand what Forex trading is all about, and you know what you are looking out for in the market, you would definitely wouldn't go into gambling all your funds away just because you want to make money within the shortest possible time. People are saying it's a get rich quick scheme. In a way, I believe it. In another way, too, it's a yes or no thing. It is a yes in the sense that when you compare the returns of Forex, okay, to any other investment, be it bank investment or whatever, the returns you can get from Forex is quite higher than the returns that you'll be getting from maybe any other investment. And it's actually the largest market in the world that trades an average volume of over 7 trillion US dollars every single day. So within a single day, we have an average volume of 7 trillion US dollars being traded. We have people who are buying and people who are actually selling. And what Forex trading is all about is simple. All that we are doing is that we are predicting the forecast of various currency pairs. So we have currency pairs that have been paired to each other, and then we are actually predicting the how high or how greater one currency is, or how weaker another currency is to the other. Okay, so if we are anticipating that price of, let's say for example, let's use our local currency, like the USD has been paired with the Ghana cedi. Okay, currently the rate is around 17 now. Okay, so which means that the USD is actually of greater value over our local currency. Okay, so at first it used to be 14 and now it's at 17. So at the time that it used to be at 14, okay, if you had a projection, maybe on a chart or whatever analysis you did, or maybe you came across an economic data or whatever, and then you realize that okay, in the next maybe 2 to 3 months, I am expecting that okay, the value of the US dollar will increase over time from, let's say, 14 to 17. So with that, you would be investing more in the US dollar, buying more of the US dollar in anticipation of it increasing in value. So as price increases in value from the 14 to the 17, that is where we actually make money from. So it's just like the traditional way of actually holding foreign currencies in anticipation that price would actually, or I'm saying price, the currency will actually increase in value over time, and then you sell it off when you want to make your profit. Okay, so this time around you can actually make money with a traditional way. Mostly they just make money from just the buying aspect, or when price is actually increasing in value, or when the particular currency pair is actually increasing in value. But in Forex, whether price is increasing in value, I keep saying price, sorry, whether the currency is increasing in value or is decreasing in value, as long as you can still position yourself to actually make money from it. So it doesn't really, it's not really dependent on how strong or how weak a particular currency is. No matter what it does, you can still make money from it. If it's weak and your prediction is right, you're going to make money from it. If it's strong and your prediction is also right, you're still going to make money from it. Okay, so I'll explain further as we proceed. But for now, do you have any questions for me? or we can still continue?
Oh, we can proceed.
We can proceed. Okay, so what is Forex? It's an acronym for foreign exchange. So foreign exchange, that's the meaning of Forex. Forex simply means foreign exchange. So it's simply the buying and selling of currencies on a global market, and it operates 24 hours a day, 5 days a week. So the Forex market opens from Monday to Friday, and it operates 24 hours a day, 7 days a week. And then we have various trading sessions where the market actually operates. We have the Asian session, which actually opens around 12 midnight, and then we have the London session that opens around 7 a.m. through to 12:30, and then we have the New York session, which opens from 12:30, and sometimes it even crosses to 1:30 to the end of day, which is around maybe 8 p.m. or so. Then we have the next day, and then the Asian session actually comes in. So when we say Asian session, mostly they have, because we are dealing with global currencies, okay, we have certain currency pairs that actually move faster, or they are actually volatile. When I say something is volatile, it means that it really moves a lot. There's a lot of movement. It has active traders who are actually putting in money and also selling off of that currency pair. Okay, so mostly during the Asian session around the 12 a.m. 12 a.m. through to 7 a.m. mostly countries in the Asian countries, or the currencies around the Asian countries, like the Japanese yen, the Chinese, the China for music, is it yuan or what? That's yen. The Japanese yen, and then the Chinese currency, and then those other Asian currencies, they really move a lot around that area. And then when we come to the London session, we have the GBPs, and then we have the I think the euro, the New Zealand dollar, and then what have you. Those currencies also move very well around the London session. And we also have the New York session, where we have other commodities like gold. We have the US dollar, and then we have other currencies that also move around those sessions. Okay, so I'm going to, when we get to that aspect of more technical, we're going to really understand, but this is just for us to understand what Forex is all about. So basically, it's the buying and selling of global currencies, and the market operates five days in a week, 24 hours a day, and it's a decentralized global market. Decentralized in the sense that there is nobody that is controlling the market. Nobody is really controlling the market. It's decentralized. It is open for all, where all the world's currencies are actually traded. So it is also the most liquid market, with an average daily trading volume of over 5 trillion. I think as at the time I was populating this slides, it was around 5 trillion, but currently we can do more than, it's actually doing more than 7 trillion at the moment. Okay. So we have people who actually trade the forex market. We have banks actually trade the forex market. We have businesses, we have government, we have investors, and then we have retail traders. So people like you and I are what we call the retail traders, who actually speculate on the market. So you have larger institutions that also operates, or that actually also speculate on these kinds, or to also trade the forex market. Are we okay? Are we okay? Yeah. So I think I explained earlier how the forex market actually works. So like any other transaction, you are buying one asset using the currency. So in this case of forex, the market price tells the trader how much of one currency is required to purchase the other. So like I used for example, one Ghana cedi, one US dollar is equivalent to 17 Ghana cedis. Okay, so which means that if I want to buy just a unit of US dollar, I need 17 Ghana cedis of our local currency before I can be able to get just one single dollar. And we have other currencies that are also paired with each other. We have the GBP USD, we have the GBP CHF, we have a lot. We are going to talk about the types of currency pairs as you proceed. Okay, do you have any questions for me?
No.
Do you have any questions for me? Okay, so what are the advantages of forex trading? We have high liquidity. Liquidity simply means money, or how active a market actually is. So it is determined by how many traders are actually actively trading, because they are we are dealing with global currencies. We have millions and millions of traders who are actually putting in money and then also investing their assets in this market. So it is very, very, very liquid, which means that the market really moves every single day. Every single day, there is always action happening. So let me even show you a typical example of the forex market. So currently we have the close of day at the moment. So you can see that what we see over here, you can see some small movements happening. Small movements. So when I play out the replay too, okay, so you see that the market will be moving all the time. You see the movement happening. So see movement actually happening. So this is all this that we are seeing is actually money being distributed. Some are also being collected as well. So we have the collection and distribution of funds. Okay, so we are going to explain. You are going to explain that later on, but this is just to show you how liquid the market actually is. There's always movement. So every movement you see, once you have a good prediction on the market, you can actually make money from the movement that you are seeing in the market. Are we okay? Are we okay? Yeah. So we also have a low barrier to entry. You don't really need to have a serious technical, prowess for you to actually start. Anybody can actually start trading. Okay, it is open to everyone and anyone at all, whether you're a businessman, whether you're a 9 to 5 worker, whether you do whatever that you do, you can still trade the forex market, and it's open to everyone. Okay, and then the third one is the liberation or the liberty that you have into. You can trade at any time that you want, because the market opens 24 hours a day, 5 times, Monday to Friday. When you are asleep, the market is open. When you also wake up, the market is also open. And then finally, we have the financial and time freedom. I'm sure that's one of the reasons why you actually invested your money to learn this, because you are looking for money. You want to make more money, find ways to diversify your portfolio, and then try and see if you can make more money from this avenue. And trust me, this can fetch you freedom, both financially and the time freedom. Currently, I am a full-time forex trader. I don't really go anywhere. I'm always sitting at home. The only time that I'll be working is when I'm sitting by my PC trying to look out for signals for my people. But I have the luxury of time for myself. And also, you can also have your location freedom as well. Okay, so one interesting thing about the forex market that I find so intriguing is the fact that I get to have time for myself. I move to wherever I want to go at any time without responding to anybody, and then I also earn my financial freedom in addition to all that. There are other businesses where maybe 9 to 5 or whatever, you may not have the time freedom. You may have your financial freedom, but you might not have the time and location freedom. Business wise, you may have your time freedom, and sometimes you can also have your location freedom, but you can have your financial and then your location freedom, but not necessarily having a time freedom, because when the business is starting out, you need to spend time to actually build and stuff. But with the forex trading, it can actually afford all the three, as long as you put in that time to learn and you understand what is going on. You still have that control over your time and your finances. And also, you can trade at anywhere that you want. You can trade on the beach, you can trade in the office, you can trade wherever, as long as you have your laptop or your phone and then you have a good internet connectivity. You can actually start trading the forex markets. Are we okay? Are we okay?
Yeah, I am.
Yeah. Any questions for me? I hope you are.
No, I mean, yeah, I'm following. But
All right. So now I keep talking about buying and selling of currency and all that. So you see, we are dealing with the buying and selling of various currencies. The in a forex market, these global currencies have been paired to each other. So for comparison's sake and for also determining the value of one currency over the other. So every time you want to place any trade on a forex market, we have various currency pairs that you can actually trade. So when you look at the screen that I have over here, you can see on my right hand side, I have just one instrument. I trade just one instrument. Okay, it's just preference. You can still trade more than one or two or three or four. Okay, and it's just your own preference as you get exposed to the market. If you want to, look into other instruments, it is also fine by you. So this is the XAUUSD, which is cool.
So, for instance,
Mm-hmm.
if you are trading anything aside from this gold,
Mm-hmm.
will it still be using the same chart, or is a separate chart that you have to?
Separate chart. So this chart that you see over here is the gold chart. If I want to trade another one, so let's say I want to trade GBP USD, I'll just look for GBP USD here, and then I add it. Once I add it, it will open. I double click, it will open the GBP USD chart for me.
Okay.
And there are even some cryptocurrencies that you can actually trade to, like Bitcoin. This is the Bitcoin chart. This is the Bitcoin chart. So you can see that. So even with Bitcoin, if you're a good forex trader, you can even catch good trades on Bitcoin, other than just buying from other exchanges and then holding. You can actually literally trade Bitcoin on your forex account. So you can see that I marked the level here, and I was expecting prices. See there's a push all the way to the upside. So everything that is happening on Bitcoin is trading around 93,000. You can actually analyze the chart without actually spending much time on fundamental data and just looking at things technically on the chart and place a trade and make money from it. And actually make money from it. That is one interesting thing about forex trading. You can, and people are also saying there are some top currencies. I said top cryptocurrencies that you can also trade, like the Ethereum. You can even trade Ethereum. This is the Ethereum chart. Same thing.
But sometimes doesn't this Ethereum and these Bitcoin at this current state require a lot of money before you can start gaining?
No. Okay, in a way I understand that when you want to invest in Bitcoin, maybe you need huge capital. But if you have a little amount on your forex trading, you can still trade them. But just the only thing is that these Bitcoin and then those other cryptocurrencies, they are very, very volatile. So that is why you should have maybe some capital, but it shouldn't be something that is too huge. You can trade Bitcoin with as low as $50. You understand? Yeah.
But then I don't think the returns are going to be that much with the
when you put in the risk, actually it's not really, it doesn't really matter how much you put in. What actually matters is the risk that you are putting on. It is the risk that determines your returns. If you are risking small, you definitely make small returns. If you are risking high, you definitely make bigger returns. But obviously, yes, when you have a smaller account, you don't expect to over risk that particular small account. So you definitely be pushed to use a minimal risk so that you can also preserve your capital. Okay. So
I wanted to find out something too. So for instance, I was watching some of the videos you sent, and for instance, I know we haven't gotten there, but I think you spoke about something like a lot size.
Yeah.
I don't know if I'm jumping too much.
You are jumping.
Okay. Then maybe when we get there, then.
Yeah, when we get there, I'm going to talk about it. Let me briefly brush through all these things because.
Okay.
Yeah. So let me just. I just wanted us to go over the whole thing again from scratch.
Okay, that's fine.
Yeah.
That's fine.
But you get to the lot sizes and all. Okay. Yeah. So like I said, we have pairs that are actually compared to each other. We have mostly the the currency on the left hand side is the stronger one against the currency on the right hand side. Okay, so the left hand side is called the base currency, and then the right hand side is also called what? The code currency. So mostly the base currency is mostly denoted by one currency unit. So in looking at this Euro USD that you see on my screen, you can read this as 1 euro equals $1.32. So one currency unit of euro equals $1.32 of what? US dollar. So which means that this euro is actually greater, has higher value than what? Than the dollar. Okay, so that is what. So you have the base currency, and then we have the quote currency. So the exchange rate of two currencies is quoted in a pair. So we have such as Euro USD, USD JPY, GBP USD, and what have you. The reason for this is because any foreign exchange transaction, you are simultaneously buying one and then you are selling off the other. Okay, so you are either buying one currency pair against the other, and then you are selling off the other against the one that you are buying for. I hope you understand what I mean. So if you have let's say USD against the Ghana cedi, and then you want US dollar, but you have on you Ghana cedis, it means you are actually buying you are actually buying units of what? US dollars, and then you are selling off your what? Your Ghana cedi or your local currency for US dollars. So when you are buying one currency, it means you are automatically selling off the other currency. I hope it's clear. Yeah. So that is so this is what the value of one currency expressed in terms of another. So we have 1 euro is worth $1.32. We have that is what we call the exchange rate. That's what we call the exchange rate. So and it actually differs because so we the forex traders, we actually trade off the differences in the exchange rates. That is how we actually make money. So that movement that I shown you on the screen, you see the price was moving, something was moving up and down. So that was the fluctuations of what the exchange rate that is actually happening. So currently, when you open the Euro USD chart, you will see the exchange rate of that current what currency pair. So let's say Euro USD. We'll talk about how to set up all this very soon, okay? But I just wanted to show you something. So when I open the Euro USD chart, so on my right hand side, this is what I have. This is the current what exchange rate. So currently we have Euro USD valued at $1.05 $1 and then 0.5, or just a little up to what 1 cent, almost $1.01. Okay, currently. So this is the current exchange rate. At first, it used to be around. If I should. At first, it used to be around $1, $1.07 dollars. Okay, $1.07, and then at another instance too, it was trading around $1.01 over here. Can you see?
Okay.
Can you see? It was trading around $1.01. So it's the fluctuations. So we are making money off these fluctuations or variances between these exchange rates. Do you understand? So if the euro is losing value, you will see that there will be a fall or a drop of what? Of exchange rate from one point to the other. But if euro is gaining strength, you are going to see what? A rise in exchange rate from what? From 1 point or what? To the other. So that is how. So when you are anticipating a fall in a particular currency pair, mostly when the base currency will be losing value over the quote currency, then you will be what? You will be hitting the sell button, and then what? If price eventually starts dropping, by looking at the currency pairs, you see that what price will start dropping, then it means that you will be making money from it. But if you're anticipating that okay, where price has gotten to, you are expecting or anticipating what? A stronger euro against the US dollar, then you'll be placing a buy position, and then you see that what? Price will start what? Pushing up. It starts pushing up.
You said something about when it drops, you'll be making money. I thought
Yes.
when it drops further, that's when you lose money.
No. You see, when you are anticipating that the euro would fall in value, okay, and then
Uh-huh.
you place a sell, okay, you place a sell, you will make money as long as you see that what it starts dropping. Can you see?
It start going
if
low. Okay.
if it start
So
going low,
how do you make money if the thing is rather dropping? Isn't it supposed to go high for you to be gaining? Or
that's
is
why
the
that
other way around?
remember I told you that whenever you are traditionally people would expect price to their investment to appreciate before they can actually make money, but in forex trading it's actually different. Whether a particular currency is appreciating or depreciating, you can still make money as long as at that particular instant your prediction at that particular time is right. If my prediction for euro usd would be a fall of the euro against the US dollar and it actually falls, let's say, so you, as you can see on the chart over here, so you can
Mm-hmm.
see on the line, let me just, so you can actually see on the line that what price is currently trading around 1 point, on my right hand side, 1.09306, right?
6 years,
Yeah, so
yes.
maybe I'm expecting, okay, due to my technical analysis, I think it will drop from 1.09306 to, let's say, 1 point 1.07 1.07088. So with that, when price gets there, I will place a sell position on my chart or on my trading account. So when I place the sell position, I should see that what price should start falling. So you see that the candles is actually dropping now. So as the candle is actually
Mm-hmm.
dropping, price or the candles being shaded in the blue area, it means that what I am making profits because I have anticipated that what there's going to be a drop around this point. Do you understand
Oh, okay.
do you understand how it works now? I've anticipated the price is going to drop around
Oh,
this point. So if it actually starts dropping and it gets to what? So it gets to my target, I've actually made money.
mm-hmm.
So as
Okay, interesting.
do you understand why do you understand how this thing actually works now?
So, if I'm getting you right, it doesn't matter if it goes up or down, so far as your prediction is correct.
Exactly.
Oh, really?
Yes. As the
I thought anytime it goes up is when you rather gain.
no, if it's going up and you are actually buying, you are in a buy trade and it's going up and you're in a buy trade, you make money. If you place a sell trade and it's actually dropping in value, you will make money. The only time you will lose is when you are actually selling and then it's buying, and you are actually buying and then it's selling. That is when you'll be losing. So,
Oh, okay.
exactly. So this tool
Okay.
over here is the sell tool, and then this tool over, this is just a monitoring tool, and this tool over here is the buy tool. Because we'll be buying, the blue area will be shown at the top. Because we are selling, the blue area will show below, and this area is our risk area. So I don't understand why people say we have it's actually gambling, because before you place any trade, you can actually determine how much you are going to lose in a trade beforehand, before you actually place the buy or sell button. You can actually
Mm,
determine that, okay, should this trade, let's say I was trading um I was trading euro usd, okay, and then maybe I'm expecting it to buy, so which means I place a buy here, and then this gray area is my loss area. This loss area indicates that whenever price is getting into the gray area, I'll see reds or I'll see my account in negatives. Okay. But I can control how much I'm willing to lose on this account. So if price gets to, I'll set my limit, I'll set my order in the sense that if price should get to this level, please, whatever loss I have, just close the chart or close the trade for me, and then leave my capital
mm,
intact for me. So I'm going to lose how much I'm actually risking around this area. Okay. I hope you
okay.
understand. You talk about, we make those um calculations and stuff. So let's say I place the buy trade and then I see that our price was what actually saying. So at this point, okay, at this point, I was buying, but price actually sold. So at this point, you will see that what I'll be stopped out exactly around this area,
Okay.
okay. And then the lot size that you mentioned will determine how much you'll be losing, and then how much you actually be making on the market. But I hope you understand how this actually works.
Yeah,
Are you
yeah, I
okay?
understand.
Okay, so you can proceed now.
Okay.
Are you okay? Can we proceed, please?
Yeah, we can. We can.
Okay, that's fine. All right, so we have two main types of currency pairs. We have the major currency pairs, and then we have the crosses. And when we say major currency pair, basically is the currency pair that has the USD element to it. So any currency pair that has the USD element attached to it is what we call the major currency pair. So we have 8 major currency pairs. Okay, we have 8 major currency pairs. So that is what I have
Mm.
listed over here. So any currency pair that has the USD element is called a major currency pair. So we have the Euro USD, we have the GBP USD, we have the USD CHF or the Swiss franc, we have the USD JPY or the Japanese yen, we have Australian dollar against the USD, New Zealand dollar against the USD, and then we have the USD card. No, there are actually 7. Okay, so you notice that all these have the USD elements attached to them, and all these things are actually tradable on the forex market. So you can decide by choice whichever currency pair you want to trade. There are numerous currency pairs available for every forex trader to trade. I am just deciding to trade XAU USD. When you say XAU USD, XAU is the compound name for gold. So we have commodities as well. You can actually trade commodities as long as we have the same way we also have cryptocurrencies as well. So we have gold, we have oil,
Okay.
we have silver, and other commodities that is actually gotten here on earth, but they have actually been paired with the US dollar. It's crazy that you can actually pay a commodity to a US dollar. Okay, so yeah. Yes, so we have gold, we have silver, and then other currency. But the most common instrument that is traded, because gold is not a currency pair, is it's not a currency pair because gold is not a currency. There's no country that
Yeah.
spends gold, so we can't call gold as a currency pair. It is a commodity, just that it has been paired with a currency which is the US dollar. Okay, yeah, so that is one of the most traded instruments in the forex market because of its volatility. It really moves more than most of the currency pairs that are listed here. And the same the same instant, if it moves and is very active, it also means that um you can make money fast from a highly volatile pair. You can also lose money faster too on a highly volatile pair as well. So it is actually a double-edged sword. All you need to do is find a way to position yourself very well so that you can actually capitalize on the gains of that particular instrument or currency pair that you are trading. And then we have the second type of currency pairs, which is the cross. And then with that one, there's no USD element attached to it. So this is just like a second class of what currency pairs. So we have the Euro CHF, Euro GBP, Euro AUD, Euro JPY, GBP JPY, AUD JPY, GBP AUD, GBP NZD, GBP card, and whatever. We have several crosses available for us to trade. Okay, so with these ones, like I said earlier, they do not have the currency pair attached to they do not have the USD element attached to it. So now let's move to the basic terminologies in trading. I'm sure that when you but before that, do you have any questions for me? Do you have any questions?
Oh no, I mean so far I mean, so far so good. I think.
All right, all right.
Yeah.
But I hope I'm not rushing to.
No, no, no. It's fine. It's
That's fine.
fine.
Okay, that's good. That's good. So we have common terminologies. Whatever industry you find yourself, there are certain terms that you use. I'm sure you're an architect, so in the
Mm-hmm.
industry in that space you'll be making mention of survey, land,
Yeah.
certain instruments that we'll be using or measurements. I don't know how this thing actually. So when you
Yeah.
find yourself in the medical space too, you'll be hearing things like syringe, you'll be hearing things like medicine, you'll be hearing things like dosage, you'll be hearing things like temperature. That is also what another field. But in the forex space too, there are certain terms that you actually use, and then they mean different things for what with their respective what names as well. So the first one we're going to talk about is long. When you say I am going long on a particular currency pair, it basically means you are placing a buy trade on that particular currency pair. That's all. It's as simple as that.
Oh,
So if I say, okay, on Euro USD, I want to go long on Euro USD, it means that you are placing a buy on Euro USD. In other words, you are expecting the euro to increase in value over the euro, over the dollar. So which means that the exchange rate of that particular currency pair will be increased from one point to the other. That's as simple as that. And then if you have long, then obviously you have what short. Short means what you are selling off your currency pair. So if you are placing a sell position in any of your currency pairs, it means that what you are going short on that particular currency pair, which means in anticipation of what a decline of the base currency over what the quote currency. So GBP USD, if you're expecting that okay, the British pound will be losing value over the US dollar, then it means you'll be selling off the British pound, and then you make money from it or whatever. If it actually drops, you actually make money from it. It's as simple as that. Are you okay?
yeah.
So we
Yeah.
have long, short, and then we have pips. So pips is the short for percentage in profit. So that is the unit of measurement for the variances of what exchange rate that happens. So when you saw that I earlier on showed you a chart where price was moving up and down and all that. So the unit currency or the unit of measurement for that movement, okay,
Okay.
from one exchange rate to the other is measured in pips. It's actually measured in
Okay.
pips. So a pip is the smallest possible price change within a currency pair. So we have most of the currency pairs, they are calculated using the fourth decimal place, in exception of the Asian pair, which is the Japanese yen. Only in the Japanese yen where we look out for the it's measured or starts from the second decimal place. So if you open any forex chart and then you um, you check the exchange rate of various currency pairs, you will see that the numbers or the numbers will be in what, in four decimal places most of the time. Most of the time you will see that they are in
Okay.
mostly around four days. I don't know if this one uh, I don't know why this one is in five, but mostly it should be in four decimal places. You will see it clearly on the MT5. You When we get to MT5, I'm going to show you. Okay, mostly around four
Okay.
decimal places. I don't know if I can
Okay.
just quickly send a screenshot of uh, GBP USD. Okay. Yeah, I think I have a screenshot here. Have you downloaded the apps already?
Then the one in the MetaTrade
Yeah,
5.
yeah.
Yeah.
And have you created the EXNESS account too?
I downloaded the EXNESS, but creating the accounts there, I don't know.
Don't worry. You don't worry. I'll take you through maybe in our next meeting or something. So you can see that. Sorry, I'm sending you. So you can see that where the GBP USD is, you see that the numbers are in, they have two groups of numbers. All of them are in 4 decimal places.
Yeah.
All of them are in 4 decimal. Then that small number at the top that looks like something that has been raised to the power is what we call the pipette. The pipette is a fraction of the pips. So when it gets to 9, at the 10th pipette, it will be added to the 2 that we see that is close to the 6. Okay. That is close to the 6. So when that small number of 2 gets to 9 and then 1 is added to it, automatically it will change from 1.2662 to 1.2663. So which means it has moved by 1 pip. So when price moves by 1 pip, that number will be added to the 4th decimal place of that particular currency pair. In the same instance,
why is it that the other one doesn't have the pip, the gold USD?
Gold, you see, that you remember I told you that gold is a commodity, so it doesn't really operate like other currency pairs. Okay, with this one we are actually talking about currency pairs here and how they are actually denoted by. Okay, gold is a commodity. Under normal circumstances, gold is not really a forex. I don't know how to put it.
I get you.
Yeah, it's not really under forex, but just like crypto, just like Bitcoin. Bitcoin is not, it's a cryptocurrency. It has nothing to do with forex, but you can still trade it under forex. That is why forex has the largest market, because there are certain instruments that are still available for you to trade on the market. Excuse me. Do you understand? Yeah. So that is it. So Euro USD currently trading at $1.25, whatever, and it moves up by 2 pips. So which means we are going to add the 2 to the last or the 4th decimal place, and to move from 1.2511 to 1.2513. And we have the exception where we have the other currency pair that has the JPY element to it. So all the yen pairs or the Japanese yen pairs, they are always denoted by 2 decimal places. So we have USD JPY trading at $120.10, so $120 1 cent. 128. Their currency, I don't even know how to mention it. $120 10 cents, and then it drops by 5 pips. So we are going to reduce the 5 by what it is, second decimal place over here, and then it will give you 120.05. Okay, so all these calculations, don't worry, when you start getting technical you might not need to be doing all these calculations, but this is just for you to understand the why price is actually moving from one point to the other. There's already a calculator or a tool that we use to calculate these pips and all. Okay, and that is that is the long and short tools which we're going to talk about. Okay, and then we have a broker. Okay, a broker is a financial service or an institution that provides retail traders access or a platform for them to trade the forex market. So before you can actually trade, you need to register with a broker. It is a broker that will give you access to trade the forex market. It gives you that platform for you to trade the forex market or speculate on various currency pairs. Okay, so you have an account with them.
The broker, does it always has to be an institution? Can't it be like an individual?
It is I don't know how
or
to
it's always a financial institution. All those times, when I hear a broker, I thought it's an individual.
Yeah. When in the I think in the, is it a real estate?
Yeah, okay, in the real estate.
In a real estate space, we have a broker that acts as a person, and then they work at brokerage firms. Okay, but this time around, so the broker that we are talking about, it is a body. It's not just one person. So yes, obviously it's one person that will open that business or that will establish that firm, but we call it a broker. Okay, so we call it a broker. In the first place, we don't really have a broker to be just one person. A broker the company itself can be termed as what? A broker. Are we okay? So they just provide a platform for financial traders or forex traders to actually buy and sell. Okay. So and then we also have the bid and ask price. So this is how the brokers actually make money. They make money from the bid and then the ask price. So whenever you get into these people, what do they call a forex bureau, you see that they always have two rates, a buying rate and then a selling rate. If you want to buy, this is the rate they are going to give you. If you want to sell, this is the price that they are willing to sell to you at. It's the same thing actually applies in the forex market. So if you look back at the picture, you are going to see you see those two numbers that on the left and on the right. So the left one is the picture is sent to
you sent me on WhatsApp.
Yeah. The 1.2662 and the 1.2662.
Okay.
So the first price you see over there is what we call the ask price. Okay.
Okay.
No. Hold on. Mostly the smaller figure is what we call the bid price, and then the bigger figure is what we call the ask price. Okay. So if you want to buy a currency unit, they are going to give it to you at the ask price. That is the amount that they are willing to, the broker is selling to you for. You, the forex trader, you are buying. So they will give it to you at a price that is quite higher. And if you are selling up, they are going to give it to you at a price that is quite lower, because they are willing to sell to you at this price. So it's the difference that is what we call the spread. So the spread is the difference between the bid price and the ask price, and that is how these brokers actually make money. So when you deposit your money in your account, they charge a little spread on it, a little spread on your trades. That is how they actually make money from you. So whatever money or whatever profit you make, they are not going to take any percentage. They've already deducted their commission from it before you place the trade. So that is why anytime you place a trade, the first instance you place a trade, you are going to see a little negative before what price start getting into profit for you. And because you are trading and then you are making profit, you might not necessarily see the little differences they are actually charging as spread. Are we okay?
Okay.
Are we okay? So that is how these brokers actually make money. They work with the ask price and the bid price, and then they charge a little commission or a little. The difference is what they charge as spread. Okay.
And there are certain something on the picture you sent me. I'm seeing some figures L and H under the GBP.
Those figures. Don't worry about those figures now. They are not of much importance for now. Okay. They are not really of much importance for now. So they're just a bigger one. I've actually forgotten what this L and the H actually represents. Okay. So this is just an advanced how do you call an advanced view of how these currencies are actually presented, but they don't really mean anything much. The most important thing is the bigger numbers that you see. Okay. Yeah, the most important thing is the bigger number that you see. I hope it's clear.
Yeah.
You can actually edit the view for you to remove those things, because those ones, they are not of really much importance for now. You can actually remove that okay. But the most important thing is the bigger figure that you see. Okay. Okay. Sell limit, sell stop loss, take profit. We are going to talk about that when we start getting into the next phase of the technicals. Okay. And then these pending orders, but for now, let me talk about the lot sizes, and then the next time we meet, we are going to talk about the sell limit, sell stop, and whatever. Okay. So when we say lot size, okay, basically it means that it determines the number of currency units that you are willing to buy or sell. Okay. it determines the number of
Okay.
currency units that you're willing to buy or sell. And then we have four main types of lot sizes. It is grouped into four. We have the nano lot size, which is way below 0.01, and it's currently not in the system now. Currently, we don't use nano lot size, but we use the least lot size you can use is a micro lot size, followed by the mini lot size, and then we have the standard lot. So let's talk about the micro lot size. So the micro lot size means you are actually controlling, or you are either buying or selling 1,000 currency units of. You are actually buying or selling, 1,000 currency units, and it's mostly denoted by what 0.01. So the minimum lot size you can enter before you place a buy or sell is 0.01. You can neither go below that 0.01, and that 0.01, it works with what the pips, because we are looking at the exchange rates. Okay, because you are looking at the exchange rates of various currency pairs, we work with what how long this, or we work with that same unit of measurement. So if it's moving by 10 pips, there's an amount of money you make. If it also moves against you by 10 pips, there's also an amount of money you are going to lose. So the 10 cents per pip that you see over here represents the monetary value of what 0.01. Do you understand? The monetary value of 0.01. So if I enter 0.01 on my account, and then let's say I am targeting, based on my technical analysis, the number of pips of SL, the number of pips of target that you are going to be looking at will always be determined by the chart that you are looking at, and then you the charts and your analysis that you'll be doing. We're going to talk about that. So for now, I'll just be giving you the risk and then your target in pips with mine. I'll just give them to you. You are not going to critically analyze before you can determine the number of pips. Okay. So
I wanted to ask, so we see a written micro lot 1,000 units. What do they mean by 1,000 units? I thought you deposit like cash.
No. When I enter 0.0, you see, when I enter 0.0,
so it's not cash related.
No. No.
But I thought they will look at your cash you have.
You see,
you can enter
you see, the forex market at first. Let me be honest. At first, if you didn't have enough capital, you wouldn't be able to trade the forex market. At first, you should have serious capital. Trade people like institutions like banks, big large corporations. Those were the people who actually traded the forex market, because they have liquidity, they have money to trade the market. Okay, but because of technological advancement, the introduction of brokers and all, they've actually made it possible for retail traders like you and I to trade our little money on the market. So they've made the system in a way that if I enter 0.01 on a chart, it looks as though I am controlling 1,000 units of that particular currency, and they will still give you its equivalent based on the lot size that you entered. So when I say 1,000 units, I'm not really talking about $1,000 or 1,000. Yes, in a way it sounds like that, but behind the scenes, you are literally controlling 1,000 units of that particular currency with your little capital. Literally.
So let's just say, for instance, if I have, let's say, $10, let's say $10, just $10 in my account, so I don't know how it's going to know my lot size. Can I go in for the biggest one, which is like the 100,000?
Yeah.
Can I go in for the 100,000?
Yes, you can.
My money.
Okay. There's the broker that I'll be recommending to you. There's a feature in the broker that allows you to enter any lot size at all, depending no matter your account balance. Okay, there's a feature of the broker, like there's a feature in the broker that allows that. It's what we call unlimited leverage. So when we say leverage, we are getting into more stuff. When we say leverage simply means that you have the ability to control larger units of currency, even though your trading capital could be very small.
Okay.
Do you understand? Even though your trading capital could be very small, so you can have a minimum of $50 in your account, and then if I set my account to an unlimited leverage, it means that I can enter any lot size at all on that particular account, and it will still pick for me. But because my account is small, the list of movement against me, I can blow the account easily because I am over leveraging that account. It's just like you having a caterpillar, and then you fix a bicycle tire on a caterpillar. Pressure will be mounted on the tire. Eventually you might like, do you understand me? Or you have a wheelbarrow tire fixed on a 4x4. You can move, but you should be very careful, else you might fall or you might crash the car. Do you understand what I mean? Exactly.
So how, now I want to know, how do you get these units they are stating over there? Is it like your money that has been converted into that, or like how
so when you enter the 0.01, okay, it will give, and it gets into profit, like let's say 10 pips, it would give you its corresponding profit and to add to your account, and that's what we are going to do right now. Okay, so if let's say I enter 0.01 on my account, and let's say my profit level, or I'm targeting, let's say 50 pips in profit, and I want to know how much money I'm going to make should price move in my favor to hit the 50 pip mark. As long as price moves in my favor and it hits that 50 pip mark, how much profit am I going to make? So with that, you are going to multiply the lot size that you use, which is 0.01. The lot size that you used, which is 0.01, I'm going to multiply it by 10, and I'm going to multiply it by the number of pips, which is the 50 pips. Okay, so 0.01 times 10 will be what? 0.01 times 10 will be what? 1, right? Oh, 0.1. Yeah. No, 0.1.
So let's say 50 times 10 is 500.
500 times 0.01.
0. That was 50.
No. 0.01 times 500. 5.
We get 5?
Yeah. 0.01. Hold on for me.
Isn't it 50? Let me see.
It's 5. It's not 0.1, it's 0.01. Let's do the calculation.
Oh, yeah, 5.
5. Yeah, so 0.01 times 10 will give me 0.1. 0.1 by 50 should give me $5. So which means that on the $50 account, if I enter 0.01 on that account, and it moves in my favor, and it moves to a 50 pip mark, I'm going to earn $5 on that particular account. And the same thing happens for the loss as well. If let's say my loss is my loss in pips is, let's say 30 pips. Okay, excuse me. It's, let's say 30 pips. I'm going to lose $3 on that particular account. Do you understand?
Okay, so in terms of the loss and the
profit,
do you create that system?
Yes.
You created that, and they say we can just create only one pip for
see you.
we can maximize one side because no, I don't know if you're getting what I'm saying. I
get what you're saying. Yes, you can set. You see,
you are the one controlling.
You see the market. Yeah, you are the one controlling the risk, and then the problem. You are the one controlling. Okay, but you see, because of volatility, and we have something we call spread. Okay, sometimes you need to leave more room for the market to also operate. So yes, you can set just one pip as your SL, but if you are setting one paper as your SL and price gets close to the level, it will stop you out. Okay, so mostly we can work. I understand you. So mostly we work with something we call a risk to reward. Risk to reward. So if let's say I am risking 20 pips, I'm expecting that I make 2 times of what I'm risking or more.
Mm.
You understand? Huh. So if let's say I am risking 30 pips and I'm using a risk to reward of 1:2. If I'm using a risk to reward of 1:2 and my risk in pips is 30, then it means my reward in pips will definitely be 2 times of what I'm risking, which is what, 60. Okay, so if I'm risking $3, at the end of the day, I should make at least $6 or more. Do you understand?
Okay.
If I'm using a risk to reward of 1:3, then it means that with the $30 risk, I should be earning $90. Well, because I'm using a risk to reward of what? 1:3. As long as price gets to the 90, so price has to hit that 90 pip mark for you to earn that money. Do you understand? It has to hit that 90 pip mark. Do you understand? For you to earn that money.
Okay.
Exactly. So like this, for
So
instance,
if
it doesn't hit, you will still see profits, but the profit wouldn't be up to that target that you are looking out for. Do you understand me?
Mm-hmm.
Do you understand me? As long as you are in profit, you will be in profit. But the maximum profit that you want, as long as price has not hit that level yet, it will still be running alright. Until it hits it, you are not going to get that maximum profit. Do you understand? That's how it works. So let's say using the same example. Okay, let me say I'm using the same example. Already we know the price is about to drop. Okay, so currently I've placed a sell over here. And then what do I see over here? This is 40. Okay, can you see the 40 over here?
Yeah.
This tool is what we call the risk to reward tool. I'm going to explain further when we start talking about the setting up of your trading view. This is 40 pips. So this level, this over here, I'm risking 40 pips. If I'm using a risk to reward of 1:2, obviously I'm going to risk 40 to make what? 80 pips. So I'm going to drag my tool to hit the 80 pip mark. And what do we see? This is 80 now. Okay, or we can just type 800 here to represent 80 pips.
Does it always have to be twice the?
At least one to two. At least 1:2. You can do.
So if you choose, for instance,
1:1.
No, I'm just saying. For instance, the place you wrote the 40, it was, let's say, 60, meaning that the
reward should be 120.
part, which is
Yeah.
Come again.
The reward should be 120.
Okay, so if the top is 120, but let's say, can't it be like maybe less than, let's say, maybe 100 or 80, or it always has to be?
Oh, if
Why?
it depends. You see, we've not really spoken about technical stuff. If you still want to stick to your 100 pips, that's fine. 80 pips, that's fine. Okay, but even with the loss, I wouldn't even encourage us to enter a loss size that is beyond 40 pips. Yeah, because we are trying to manage our risk here. Right now we are using 0.01. That's why it looks like $4 the Enyesca. If you start using lot sizes of 0.1, when it hits your SL, you are going to lose $40. If you use a lot size of one standard lot, when it hits an SL of 40 pips, you are going to lose $400 on that particular trade. So the higher the lot size, the higher the returns, and then the higher you actually lose as well. That's why risk management is very, very key, and that is why people see it as it's gambling, and then at some point too, it also looks like it is also a get rich quick scheme. If I place a trade here right now, and I have a capital of, let's say, $1,000, and I enter one lot on $1,000, and it hits this 80 pip mark, there and then I'm going to make $800 that instant, as long as it hits that level. Like, do you understand how?
Yeah.
That is how this thing works. So your determining factor, the determining factor is your risk. How much are you risking?
Interesting.
Exactly. How much are you risking? So with this same 0.01, price has to hit this 80 pip mark. I'm going to show you how you are going to enter the values on your MT5 to represent this chart that we have over here. I'll show you in our next trade, but for now let's stick to the lot sizes. So you see the price has smashed through our blue area now. So this area indicates that what price has actually hit our 80 pip mark. So if we enter 0.01 on this particular trade, we would have made $8. Price will just close, the broker will just close your trade for you automatically, and then it will add your profit to your already existing capital for you. Simple as that.
Okay.
And if you are also losing to, and price smashes through your loss area around this area, it smashes through your loss area like this, it's going to just deduct your $4 from it and then leave the remaining for you, so that you don't lose further. So this is just a risk management tool, because if it crosses this mark, you'll be losing more. So you are just okay, this is the level I have set. When it gets here, when price gets here, close the trade. Whatever I've lost, you just deduct from my capital. I'll wait for the next trade. So before you make money, there is money, you risk money. You risk money to make money all the time. It's either you win or you lose. So that is why risk management is very, 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 very key. Risk management is very, very key.
Okay. So this blue and brown thing you've created, what's the name for it? Like,
That's a risk. This is the sell. This is the risk reward tool for sell, and then this is the risk reward tool for buy. So this is short position.
Okay.
This
so
is long
gray
position.
is for
So the gray is loss area, blue is
selling,
profit.
and
Because
blue is for buying.
because we are selling, which if you are selling means you are expecting a decline in the currency, which means dropping. So which means you'll be making profit as price is declining. But if you are buying, because the price will be pushing up for us to make money, the profit area will be at the top and then the loss area will be down. So if you are selling and price starts buying, you'll be losing. If you are buying and price starts selling, you'll be losing. Do you understand? So when price falls into the gray area, just know that automatically you are already in reds. You are already running in negative on your account. But just that it will be a floating, it will be running in floating negatives. Okay? It will run in floating negatives until you close the trade. That is when the amount will actually be deducted from it. Do you understand? The same instant when prices starts moving into the blue area, you will be seeing profits, floating profits. It is until you either manually close the trade and then secure the little profit you've had, or you wait for price to hit your target and then it will close automatically for you. The same instance, when you place a trade, you can still decide to close a running trade, either in loss or in profit. You may not have to necessarily wait for price to hit this target before you can close. You can still decide to close the trade if you can see that, okay, although I have set my SL to be around 40 pips, but let's say price was playing around there halfway through my risk, and I still see that, okay, I think that price will eventually hit my loss. So instead of me losing $4, maybe I can close now as prices. I can close now at around negative $2, because right now price has actually moved halfway. So which means I have minimized my loss. The same instance, you can have a feeling that, okay, I think the price might not get to my target. So if I make, let's say, half of what my target, I can close maybe half of it. So instead of making all the 8, I can close at, let's say, you walk away with, let's say, half of your profit, which is maybe $4. But this is not really advisable because you are trying to grow your account too. Okay, so you always want your risk to reward to also play out so that you can make money and then have enough to also risk for the next trade. That is why I always go with a risk to reward of 1:2. Because if you are using a risk to reward of 1:1, and then you start getting into your losing days, you'll be losing more because there's no profit to actually back your losses as it comes. Do you understand? That is why we always work with a risk to reward of 1:2 or more. Okay.
Okay.
Yeah.
Okay.
Do you understand?
Yeah. So I want to understand some basic things. Me, I didn't do economics, so you see, anytime we talk about selling,
This is not the time. Oh, prayer soldiers.
you want to then pray.
Charlie, I've taken someone's money.
So,
I need to deliver.
I want to get some basic things. This one, so we have the selling and we have the buying.
Hold on for me. Let me shut down this WhatsApp before. That's.
Okay.
Hold on for me, please. Let me just shut down my WhatsApp so that it doesn't distract us.
Kiki Ambra is calling you. You don't want to pick her.
Group chats. I'm coming.
She's a good friend of mine.
You know her?
You
know Kiki? Wow.
Yeah, she's a friend of mine.
Wow.
I went to school with both Martin and Forex at Central University.
Wow. Hey. Really?
It is you on TikTok. Mr. TikTok holding this microphone.
Yeah.
Yeah, I know her. With a chubby face.
Yeah. She's our prayer leader. Yeah, prayer leader. No. How do you rough? Maybe I say I'm pie. Hey, Charlie, I've closed this thing. You shouldn't do that. I've closed this thing now. Anyways, your question.
So it's sometimes I get a bit confused when it comes to this. So if they are buying and you are selling, and you have to buy when it's low, and you have to sell. That's dynamics. Like,
don't worry, don't worry. For now, you are. It looks like. When I was saying that word.
No, when you say that, and you gain when it's selling. I was a bit confused, and you gain when sometimes he's buying and selling.
Yes.
So if when you are
Adikami.
Okay.
This thing I've ended it too. Because the call comes through, I can't hear you properly.
You can't hear me?
Yeah, I can hear you now, but because the call comes through at some point. Yeah, you have closed it. I've closed it. I'm listening.
I'm saying that, you see, unlike the Forex bureau, where let's just say maybe you buy the dollar, and when it goes high, you can sell it and make profit.
Exactly.
I get that. I get that part. If I'm a $1.50, 14 cities, and they're 17, I'm first of all. I get that part. But when it comes to the Forex part now, I see that, you see, baby, I already arrow not to blue now down. For me, sometimes when I see these charts, I feel like, okay, it's going down, so maybe the CD, or let's say the amount is falling. So, and you said that now can be to say, like, when you're selling at that point, you gain more. I'm just a bit confused at that.
Okay, when I say when we sell, you gain more, in the sense that before I place the sell, okay, there's a lot of dynamics that come in before I place a trade, which I've not spoken about yet. Okay, so this chart over here, I need to analyze the chart. So there's a way we read this chart before we can place a trade. But for now, I'm just using this to explain. Kiki, can you stop praying?
It's a group chat, so she's not calling.
She's the one doing the course. Not a prayer time. I don't know it's prayer time. Yeah, I've already texted her that I'm teaching. So if I'm not joined, then no, I'm teaching. Okay. Okay, I know what I'll do. I know what I'll just join and mute myself. Someone say more because it's also.
Can you hear me?
I can hear you, but you see, hold on for me. I've joined. So you are saying something.
You were saying that it's dynamic.
Like
that.
Them gonna make I want me to class there some of you. Remember. So there's a way we analyze this chart. Okay. Because I told you in the forex market, just understand it. I want to make this as simple as possible. In the forex market, you are either buying or selling. Okay. You are either buying or you are selling. You remove your mind from the traditional forex bureau, how it's happening and all, where you are expecting price to you are expecting what you've bought to appreciate before you sell or before you make money. Okay. Here you can make money buying, you can also make money selling. So whether the currency is increasing in value or is declining in value, you can make money as long as your prediction is actually right. If you are predicting a buy or an increase in value, you should expect that price should, or the market should actually buy indeed that it actually bought before you can make money. If you are predicting that price will sell, price should indeed sell, or the exchange rate should actually fall in value before you can make money. If you are predicting a buy, when I say buy means increase in currency value. When I say sell, decrease or a decline in currency value. If I am expecting that, okay, in the next 3 days, okay, at this instant, maybe Euro USD would be declining from its current price of 1.08363. We are predicting that it will move from 1.0863 to, let's say, 1.07880. So at this point you are expecting a more drop from here to here, and currently you are expecting maybe an extra 70 pip drop. It should happen that way. If it doesn't happen that way and then it rather pushes up, you are going to lose money on the market. Do you understand what it means? And to get a little bit technical here, if you are buying, because we are buying, we are looking at discount. We are looking at the least price we want to buy price at. So mostly this is where the buy low actually comes in. So you are buying at the lowest point where price will actually get to before the appreciation actually starts, or price actually starts appreciating in value. And if you are selling, you don't want to sell early. You want price to be at its peak before you sell it off. So price has to get to a higher. So you can see that before I started selling, price got to what? A certain peak. So price was definitely buying. It was actually pushing up. So this movement is a push up. It was a push up. It got to a certain threshold. Then it gave me an indication that, okay, now price is ready. It has bought for some time, so now price is ready to sell off. So at this point, if I had placed a sell position around this point, you will see that what? And if price actually start dropping, like we are seeing over here, that black candle smashing all the way down from this this level to this level, you start making profits. Do you understand?
Okay.
You start making
Okay.
profits. But if it's pushing up, you see, we even made extra profit while what? Price smashing from what? So price moved from this level to that level. How many pips is that? How many pips is that? So we sold from here to here. That's over 200 pips. And that 200 pips, if I had entered 0.01 and I'd waited for price to hit this level, I would have made $20 on that particular trade. Instantly.
Okay.
Instantly. 20 pips. If I entered 0.1, I would have made $200. If I entered 0.05, so this currency pairs, we have the least one. I said currency pair, lot sizes. So we have the least one, which is the 0.01. Okay, so you can have 0.01, 0.02, 0.03, 0.04, 0.05, up to 0.09. When we get to 0.1, then we've moved from the micro lot to mini lots. So we have 0.113, 0.15, 0.17, whatever, 0.2, 0.3, 0.4, 0.5, 0.6, 0.7, 0.8, 0.9. When we get to 0.9, we add an extra 0.128, then we enter into the standard lot zone. So with the standard lot zone, we can enter, that is where the whole numbers are. We can enter one standard lot, 1.5, 1.3, 1.1, whatever. 2 standard lots, 3 standard lots, up to even 50, 100 standard lots, 200 standard lots. As many standard lots as you can enter. As long as you have an account to actually hold that trade. You get it?
Okay.
Yeah.
Okay. Okay. So the lots you determine it.
You determine the
determine
lot size. You determine the lot size. And when we start
Okay,
getting
so
into technicals, you also determine your risk and what? Your risk and then your reward too as well. Okay.
Okay.
Can we?
Okay.
Are we okay? Are we okay?
Yeah. Yeah.
Yeah.
Yeah.
So that is how this lot size works. So how to calculate your win? So you always have to make this. If anything, this um this formula. So mostly the lot size multiplied by 10 multiplied by the number of pips if you want to know the actual value, whether in risk or in profits. So you multiply the lot size, which is of your choice, whether 0.1, 0.01, 0.02, any of them. Lot size, you multiply it by 10 and then you multiply it by the number of pips. Okay. So
Okay.
yeah, so that is how it actually works. Okay. Alright, so the next one we're going to talk about, so for instance we have if you sold GBP USD and you made a profit of 50 pips using one standard lot, you calculate it. So you have the lot size of 1. 10 is always constant. Okay, the 10 there is always constant, but what varies is the lot size and then the number of pips, whether in profit or in risk. So we have one standard lot multiplied by 10 multiplied by 50, which will give you 500 US dollars. Okay, so entering a one standard lot on your account and then it moving 50 pips in profit means that you are going to make $500 on that particular account. I hope it's clear with the
So
lot
this
size.
this $500, yeah, it's clear. This $500 that they are saying, is it like physical cash or is just?
It's money, oh, Chama. $500, $500. This is no BSing. $500, $500. I'm telling you.
Oh, okay.
Yes.
I thought it's just.
And when you are losing $500 to it's $500, $500. it's actually $500.
But do people really lose a lot of big money?
Yeah, bro. I don't want to tell you, master. I don't want to discourage you yet. I've lost money. I've also made money. Okay, so you let me just keep it for now because I don't want to scare you. I don't want to scare you. But all the same.
I know there's a bit off topic, but do you think in order to make it on in Forex, Do you have to dedicate like full time, or you can decide to do it part time? Is when you see
You
what
can decide to
like.
do it part time. It depends on your eagerness to learn. Okay, but on an
Mm,
advantage, if you are doing it full time too, you have time to learn very well. Okay, but if you are
learn,
doing it full
yeah.
time and then you are starting out, please make sure you have enough capital to rest your hands on for, let's say, for the next 1 year or two. Okay,
Roughly,
roughly 1 year or two or 6 months. You can
I
actually
mean,
learn.
like roughly how much?
Hey, this asking me.
No, we are saying 1 year. Saying I definitely have to know figures. So,
Oh no,
so
you see,
maybe
oh now you see.
50,000 cities,
Okay,
5,000,
listen
10,000.
to me, listen to me. The truth of the matter is that when we are all different and we all have different spending habits. To someone,
Mm.
1,000 Ghana a month is okay for him. To another
Yeah,
person,
I want to use your spending
oh hey,
habits.
please. To another, to another, that $1,000, that 1,000 Ghana is like 3 days money for the person. Do you understand? Uh-huh.
Mm-hmm.
So you know yourself. You know how much you spend within a month. Calculate that using one. Okay, you know that, okay, I spent X amount of money in, but before when the month ends on the average. So I will calculate that by 12 and then add something extra to it, and then know that, okay, within the next year I can actually rely on this without doing anything. Without doing anything, I can survive on this particular amount of money, and then you
Mm.
use that to learn. So don't quickly switch to another job if you are starting out, because as you are starting out, it's not automatic. You would have to start learning. There's certain experience, but just that the learning curve of your mentor wouldn't be at the same as you, because you have someone who is
Mm.
guiding you. The learning curve will be quite shorter than, you know, someone who's just
Mm.
starting out without any mentor. Do you understand?
Yeah.
Exactly. So that is how it works. Okay.
Okay.
Mm.
Okay.
So I would like to, let's break for now, okay, because we are getting into the chapter 2, which is the market
Okay.
analysis. So I'll use the next session to actually start looking. Before we do market analysis, we'll talk about the broker, how to set up your broker. We'll talk about the trading view. We'll talk about how to set
Mm.
up your account, and we'll talk about how to actually place trades, those little things. So once we
Mm.
understand that, then we head straight into the advanced session. Okay, so the beginners, I'll just use 2 sessions to explain the beginner session. Then as time goes on, you start dealing with the advanced one. Okay, I hope you are clear.
Okay.
Good.
Okay. Okay.
So in our next meeting, I'll definitely talk about. I think I already mentioned something like leverage and stuff. So I'll talk about it. So the leverage. Remember, I told you that there are certain brokers that allow certain leverages. You have 1:100, 1:200, 1:300, 1:400. So if you have a leverage of, let's say, 1:100, it means that um you have you multiply the account balance. Mostly, we have a margin. We have something we call margin. Okay, margin is just like a percentage of your capital that has been set aside to cover for a running trade. Okay, so let's say, for example, you have $1,000 account, and then the margin is still $1,000, and then you are running a leverage of, let's say, 1:100. You are going to multiply that margin of $1,000 to 100 to make 100,000. To make what 100 times 1,000 would be what, 100,000, right? 100,000, right?
Mm.
Yeah, so that 100,000 there is not just money. It just means that you can control 100,000 units of currency. Controlling 100,000 units of currency means that what, you can actually enter what, one standard lot on that particular account. So the maximum lot size you can enter on that particular account is one standard lot. Do you understand?
Mm.
I'll
Okay.
explain further. I don't want to bombard you. I have already bombarded you with knowledge overload. So let's pause for now. I'll explain further the leverage. So in our next meeting, we are going to talk about leverage briefly, and it's not anything you don't really have. It's not something that um, is of high important, like you need to understand it. But what you really need to understand, you need to understand lot sizes. You need to understand how to calculate your monetary value in lot sizes, okay, and how to calculate your pips to. That will be under market analysis. We are going to talk about that. But before that, you need to learn how to place trade. You need to set up your brokerage account, and then you need to also understand how to place trade using the MT5. So whether MT5, I'm going to do certain demonstrations with you, and then I'll show you how you are going to do everything. Okay. So you, for now, you continue with the lessons. I've already dealt with the first part of the beginner session. So I don't know where you've actually gotten to, but if you can go over where we are setting up the trading view and how to actually place trade in the market, you can go over them, and then even also look into the leverage aspect too. That would also be fine. Okay. So we can just I'll just, when I come, I'll go over again, and then you can have the full understanding. Okay.
Okay.
Obviously.
Okay.
All right. So
All right. Thank you so much.
you are welcome. You're welcome. You're welcome. So
Mm.
that means next week, right? Are we doing next week?
I thought it said Saturday or.
Saturday. Like we want to make it Saturday, no. My first batch of students, you know, I'll be finishing with them by next week. Okay. Most Saturdays, I don't really want to fix meetings on Saturdays because of schedules of people and stuff, and even myself. Because mostly Saturdays is either I'm in town or I might be going for a program, and then kind of things.
I mean, I can't remember. You said 2 days, so me, I was
Yeah,
thinking.
yeah, it's actually 2 days. It's actually 2 days. Okay. But I said that even if you don't do 2 days within a week, we can do one day, but we'll run for over 2 hours, because one session will be 1 hour. Okay, that is why I have even extended 1 hour today, because I'm expecting that, okay, even if you don't make it on Saturday, we would have covered a lot today. Okay, so you Saturday, let's see. I'm hoping that we can still meet on Saturday before the weekend. So I'll try and also finish with my other class by next week. Then we can have some time, and then I'll fix you on 2 days, whether, so that I can remove you from the weekend meetings, and then we can do 2 weekdays, and then we can actually cover a lot, as much as we can. Okay. Excuse me. All right. So I can't really confirm on Saturday, but let's see. Okay. Let's see. Saturday, what time would you be around this time? Like 7, yeah.
Oh yeah,
Around
sure.
7. Okay. You, let's see. Let's see if Saturday we are going to meet then. All right. So you
Okay.
Saturday
Oh,
during the day you can just text me. I'll try and make time for it, because Saturday is there. Well, we need sometimes, something just come up. You are
yeah,
going
I
out,
understand.
and then things on. So I don't want to promise what I can't deliver. That is why let's just leave it hanging. Okay, let's just leave it hanging. All right. Okay. So Fosu,
Okay.
I'll see you, Godwin. I don't know if you still want the recorded session. I still recorded this session though, but I don't know if you still want it. That's fine. If you don't want it to, you can still
Oh
go back.
yeah, I'll need it. I
You need
mean,
it. Okay.
why not?
All right. So I'm going
Mm,
to make this available for you right after the session. But I need to send it to you through Telegram, because WhatsApp there, you know
sure.
the limitation. So just send me hi on just send me hi on Telegram, and then I'll I'll get it
Okay.
for you. Okay.
Okay.
All
I
right.
use a 026 on Telegram, so I'll send you.
Okay. Let me even send you hi on Telegram. Hey, this is 026.
Yeah, I use a 026.
026. Okay. You send me hi on it. I'm going to send it to you with my Telegram number too. So you send me hi. This my MTN is also on Telegram, but you send me hi on it. Okay. Okay.
Okay.
You just send me hi on it.
Okay.
I'll make the video available for you. Okay.
Okay.
All right.
Um,
Okay, so thank you so much
well,
for your time, and I hope you
alright.
learned something. So we are going to continue from where we left off in our next meeting. Okay.
Alright,
All
sure.
right.
Thank you so much.
All right. You're welcome. You're welcome. So keep practicing, keep watching the videos before our next meeting. All right.
Okay.
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 Thank you.
Yeah.
Bye.
Bye.